In progress.
Thank you for taking time to learn about the different long-term care insurance products and how they work. This is Rob Barnes with Integrated Insurance Consulting, and you are likely sent here from your advisor, or perhaps you are an advisor. IIC partners with advisors to help them serve their client protection needs. We work exclusively through advisors or referrals from clients we've served. This presentation, as labeled, will help you explore the different long-term care options available today. Will help you better understand how they work and compare so you can decide if having long-term care insurance protection is right for you. Now, our other planning video is titled Long-Term Care Planning and Protection. And you can go through that to figure out the odds of needing care or the costs if you do. But I want to quickly recap that we want you to have a plan, most importantly. We don't know for sure you'll need care down the line, but if you do, who will care for you and how will you pay? Are you relying on the government, your kids, your assets, or should you consider having insurance to minimize the risk? Some are relying on the government, but to be clear, Medicare only pays for up to 100 days of care, and that's only after a certain length of hospitalization. And Medicaid only pays if you spend down most of your assets first. Now, some people are relying on family, and that's a viable plan, but I urge you to have the conversation with your family. There's a difference of wanting to care for you versus feeling obligated or having to care for you. Should you remain self-insured, or is insurance protection worth considering? I realize the biggest fear for many is running out of money in retirement, and if you experience a significant cost for care, it may derail your plan. You might do better than insurance, but it'll take time. And when comparing investing to insurance, it's best to identify what assets will be utilized and account for any shrinkage from taxes or market losses to have a fairer comparison. There's three options available today in a big sense. There's traditional long-term care, which I like to call pure protection. There's hybrids, which I like to call payback and protection. And there's life insurance with a rider, which I like to describe as a known outcome. Now, each option leverages your premiums into a much bigger care bucket, providing tax-free benefits if needed. And this helps protect your assets and add confidence you'll be okay if you need care. So let's look at the pure protection attributes. It often provides the largest bucket of protection per dollar spent. But if you don't have a claim, there's no return. And you are subject in most policies of rate increases down the road. In fact, this is an area that most people have turned negative on traditional long-term care because of the price increases that continue to happen with existing policies in today's marketplace. There's fewer options available today, but there's a unique benefit only available in the traditional option and not available in the other two, and that is potential asset protection via a state's partnership plan. But there's fewer partnership plans available, and it takes a certain size estate where that might be an important attribute to have. So some might prefer traditional, especially because of the partnership stuff. It's easiest to understand traditional if we compare it to auto and homeowners insurance. In order to fairly compare the different products, as we go through them, we've kept the payment equal. So we have a female age 60 in good health, and we're showing a 6-year design in this case, and we're spending a premium of 10,000 each of the next 10 years. Now, you may not have that or be willing to pay that for the care that you want, but it's a linear number. So if you lower it, the benefits lower accordingly. And if you want more protection, then the cost would go up accordingly. So in this design, our 60-year-old female would have a starting bucket of protection of 241. She'd be able to access $3,300 a month for up to the 6 years as needed. And this is inflation growth by 3%. And so at age 80, she'll have a bucket of 435 and access to $6,000 per month if needed. For the hybrid payback and protection, one of the two things that people find favorable is guaranteed pricing and the fact that it pays at death if care is not needed. So you have benefits coming back to you one way or the other. And you can design these to quit and get your money back as well. But they often limit the funding options. That's one of the reasons we're showing a 10 pay. There are some hybrids that offer life pay, but they're fewer in the marketplace. Usually we're limited to 10 or 15 years max. And they have a higher starting cost than traditional, usually. Our example today actually shows that we have more money for this female age 60. So unless the partnership protection was important, this one's a no-brainer that it's a better buy than the traditional for this female age 60 with the carriers we're comparing. So the starting pool would be 327. She'd have 4,200 a month for up to 6 years. And at age 80, you'd have a bucket of 590 with access to 7,600 per month. So if we're going to expose our assets to long-term care expenses, why not consider taking some from the pile and leverage it into tax-free benefits to protect the rest of the assets? The third option is life insurance with a rider. Now, this is where the marketplace has a lot of different products that work in different ways. So we want to make sure that you have a guaranteed product, a known benefit, and a known outcome. In other words, with Life with Rider, the death benefit is your pool of care. So whatever isn't used for care is paid when you pass. That's why it's a known outcome. We guarantee the most back with Life with Rider as well. We'll compare that in a few minutes. And there's a few joint policies, and we're going to address one of them in a minute. But I want to emphasize a couple of things about these products. Buying a policy that is projected versus a policy that is guaranteed means that there's risk of surprises or increased premiums down the road if you don't buy a guaranteed chassis. So we want to have no surprises. A lot of people have become dissatisfied with traditional long-term care marketplace because of the surprise and substantial increases. So we like guarantees, but we have the full array of product available in the marketplace for you. And then I want to make you aware of inclusive riders versus added riders. So there's some life insurance policies where you don't get the full death benefit. They discount it at claim time. And when you're planning for care, we like a known outcome. So we like the riders that allow you to withdraw dollar for dollar. So this is an example of this same female. She buys with her 10,000 for 10 years. She buys a $267,000 death benefit policy. She has access to 4% of the money per month, which is 10,680. And obviously, this would run out if she were using the maximum in 25 months versus the 6-year examples we showed on the other two. Now, if she uses half of that money, then it's going to last twice as long. If she were preferred or better risk, she would either have better benefits or a lower premium for the same benefit, just to be clear. And if you were a male, males will generally get a better buy on traditional than females and on hybrids than females, but men will cost more or buy less death benefit for the same premium with life insurance because women outlive us on average. So the reason I like know an outcome as well is that if we know when you're going to pass or when you need care, we can tell what the return is. So you see the orange numbers to the right of the bucket there. At age 80, if this lady were to die, she would have had a 6.05% net return on her premiums versus the death benefit. And if she lives to age 90, she still has just shy of 4% as a net return. So for those that are comparing investing to insurance, you need to make sure that you're accounting for any taxes and management fee on the investment side. So you would probably gross up those numbers, and you can see that this known outcome is kind of a bond alternative over the long haul, to be clear. So if you're not ready to look at your permanent long-term care solution, And the younger you are, the more that might be the case. There are some term products that can lock in your insurability and guarantee you the right to get guaranteed life with rider. And that could be a good band-aid, especially if a disabling chronic illness suddenly appears along the way and what if turns into what now. So there's a couple unique things I just want to mention that will be design questions for you down the road. If you want to control your care regimen to allow for unskilled caregivers and to be able to pay family members to care for you, then you need an indemnity claims model of a product. And for those that are concerned about longer need situations for care, like an Alzheimer's or dementia, there are products with lifetime benefits out there as well. But we're going to look at a unique Life with Rider product that I like to call Legacy or Care. And before you give up on all insurance options, and depending on your estate value, I would encourage you to reconsider this product. So for couples thinking they're going to remain self-insured, um, this will help when you're comparing projecting to protecting. The thought is if the first spouse needs care, the other healthy spouse will care for them, but at a time it might get bad enough where you can't care anymore. And if the first spouse has substantial claim costs, then it lowers the pile and it puts more risk for the surviving spouse. And so this product uniquely insures a married couple, and it only pays for the surviving spouse's care or when the second person dies, or in the unique situation where both husband and wife might need care at the same time. And so this is a safety net, if you will, in case things don't go as projected and we eat into the estate with lower expected returns and higher expected cost of care for the first person. And note that at age 90, if the second death occurred at that time, this is a 7% net rate of return on your money versus that individual product we just looked at. So just a unique product for those that have the estate value where maybe we have enough, maybe we don't. And, this is a good backdrop for it. So there is a difference between doing projection planning and protection planning. So which one's right for you? I don't know which one's going to work best. The reality is they all accomplish the same thing. They take some of your money and create a bigger pool of tax-free benefits, protecting you from having to liquidate the IRA and pay taxes or liquidate market assets while they're down and can't recover the losses and so forth. But at a big sense, traditional long-term care pays nothing back. The hybrid in our example here has a death benefit of 101,000, so she paid 100 in over 10 years and she'd get her money back if she goes in her sleep and never needs care. And the third option is going to pay out that death benefit one way or the other. So if you play the claims game of when do you need care or when do you die or how long is your care, you'll see that different products can work in different ways, and only hindsight is 2020. But I encourage you to explore these insurance options and not kick the can down the road, because the reality is it not only takes money, but it takes good health to buy these products. And so while your health is better today, explore and decide if they're right for you. And we're here to help you with that process. So you can take some of your money leverage for tax-free benefits. And for those that are going to remain self-insured, I just want to emphasize, if you have legacy goals, making sure that maybe you make gifts during your lifetime to whom you want, or maybe you put things in an irrevocable trust, because if you have adverse long-term care expenses down the road and your money didn't grow to where you thought, it could disrupt your legacy goals as well. And so the question is, should you remain self-insured? So I'm here to help you with any questions and confusion. We can do a Zoom, a call, or email with your questions. And if you want to evaluate if long-term care insurance is right for you and design what might be your favorite options, I recognize that our right fit process, we would pre-screen your health and then we'll have a design and education Zoom or call. So I'll leave you with a couple of questions to ponder as to the design. We can design things based upon the protection pool that you want to have, or we can design things based upon the premium that you're willing to spend. And so you can, will need to decide if you're going to make payments over time, maybe your lifetime, maybe for 10 years, as we've shown in these examples. And some people are going to reposition money. They might have a CD renewing. And instead of just renewing the CD, they'll move it over and one pay a hybrid or Life with Rider as an example. And we have the opportunity as well to repurpose existing policies. Some people might have a perfectly good life insurance or an annuity, but they want to use that as their payment, and sometimes we can do a tax-free exchange with them. So at the heart of what we do is we make you expert shoppers. In addition to owning IIC, I'm on staff at an insurance brokerage operation, and we have access to a lot of carriers and products. So it's a matter of designing what's right for you and finding the best product that serves that. We have the ability to influence things by being on staff at a brokerage shop. I get to call and argue with underwriters on your behalf at times. And we understand that you need to understand these products better and decide if, in fact, long-term care has a spot in your situation. And so if we walk through and we explore and you decide not to have insurance, then you've done your part and we've done our part of helping you explore these on behalf of your advisor to see if it's right for you. So if you do decide to move forward and implement protection, the rest of our process would be application, underwriting, and getting the policy placed. So our link that you already have is here, and there's other resources if you're wondering about the chances of care and need for, and costs of care and so forth. That's our other presentation titled Protection Planning. And if you want to reach out to me, my cell is here. My email is here, and we appreciate your time today of going through this. Please feel free to share these things with friends or family that might be wanting to learn more about long-term care as well. So thank you for your time, and we look forward to talking with you. Enjoy your day.